Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. After a very unstable week, the Australian dollar gave up most of its intraday gains on Friday, posting an inverted hammer as the US dollar rebounded back to 108. The move followed the White House confirmation that President Trump's 25% tariffs on Canada and Mexico imports and 10% on Chinese goods took effect on Saturday. Meanwhile, traders have fully priced in now an RBA rate cut starting in February, expecting a 25 base point cut if inflation slows more than expected. Also this week, all eyes will be on the US economic data, mainly January's non-farm payrolls, which is expected to show a slowdown to 154,000 jobs added, down from 256,000 in December. The unemployment rate is projected to dip slightly to 4.1%. From the inverted hammer, the market is somewhat indecisive. However, I view the support from 61.65 and from there could see a bounce on towards the top side target of around 63 to where the crucial 60-day moving average is at 63.5570. So I now feel there could be a turn in the trend very soon. The euro dollar continued to slide this week, hitting a fresh intraday low of 103.49 as the dollar rebounded to 108, following the White House confirmation of Trump's tariffs. With the technicals heavy, we could see a further weaker play into the start of this week. However, as we get closer towards 102.85 to 103.30, could see a reversal from there and look back towards the topside region of 104 to 105. Despite Thursday's downward pressure, the dollar-yen has remained above the key level of 153.3065 for 4 consecutive days. And now, as we can view, the market is attempting to rebound back towards the region of 155 to 157 area. I do feel the bears are guarding this region, and with an ADX supporting a bear trend, a mixed RSI and a negative MACD could give opportunity to sell into the rally and eventually see the market turn down and look towards 153.3065 as mentioned. A break there will give further scope to the downside and look towards 149. Turning to sterling, it's going to be an exciting week as all eyes turn to the Super Thursday's Bank of England rate decision, which expects a rate cut of 25 basis points from 475 to 450. Which could significantly impact on the currency. Nevertheless, since the break of the trend, I still feel there is upside potential. Although there has been much disappointment from the break and lack of momentum, let's see if the market can recover from the lows around 123.2030, which is the break level, once resistance now support, and look on towards the region of 124 to 126. Turning to commodities, well, the precious yellow metal reaches a record high of 2,817, driven by uncertainty over the US tariffs. Investors are also digesting Friday's US personal consumption expenditures, the PCE index, with the core PCE rising to 2.8% year over year in December, matching forecasts. But the technicals still remain somewhat positive. Keep an eye on this pattern here because it has posted close to a shooting star, which is negative, and we would need to see confirmation support this bearish candle, and that is if we see a break of 2,774 to 75, which could see a move down towards the region of 2,720 to 40 area, where bargain hunters are likely to be lurking. If we fail to get the confirmation though, all eyes will be on the top side to around 2,850, with much talk still to $3,000 an ounce. With the tariffs in place, bullish momentum came back to oil and a strong hammer has been posted following the long-legged doji. They could see now a rally away from the 72 region and on towards the region of 74 to 76 as a target for this week. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new week.